we all got together before this and said that instead of what was publicised, which is we're each going to speak for 10 minutes and then basically tell you how awesome we all are, which is obviously my favourite topic, but maybe not that interesting. We're going to do a quick summary of where each of us sits within the ecosystem, and we all sit at very different points. And then we're going to get through that as quickly as possible, and then we'll open up for questions, because it's sort of hard to get a sense of who's in the room and what you actually want to hear. So we're going to turn over to you quite quickly. So I'm going to do a couple of minutes. I run a fund called Rampersand. We're an early stage tech venture capital fund. That means we back companies that are in market, have built a product and usually have a little bit of revenue or are really close to it. So we don't back idea stage businesses. We write cheques of between $250,000 up to $2 million. We have a portfolio of 13 companies. We're in our second fund. Our first fund was less than $10 million. Our second fund is approaching $50 million now. So we like to back companies early and put several rounds of capital into the business. Our whole philosophy, the thing that drives us, it's worth through this and through all the other panels understanding that every fund or every investor has different appetites, and understand what makes us tick. What makes us tick is three things. We want to make a whole lot of money for our investors, because if we don't do that, then basically the world stops turning, and no investor is going to do anything different apart from want to make money. But the other two are much more important for this room. The second is that we back founders. We want founders to be our heroes. They're the people who are toiling and coming up with ideas and striving every single day, and we think making founders famous and making their success is good for the ecosystem, which brings us to number three, which is we're driven by the ecosystem. We want to take other people along this journey with us, whether that's investors or salespeople or HR people or students or whatever it might be, because we think fundamentally, we started this fund, it's me and four other partners, we started this fund when we came back to Australia from overseas. I came back from Silicon Valley. I was a head of marketing with a bunch of venture-backed businesses, which I was really lucky and fell into a good crowd, which is different to the years before that. But and I was involved with businesses. We sold a couple of businesses to Facebook, a few businesses to some big telcos. So we came back to Australia and we were really driven by this frustration that our best founders were not getting the backing from investors in this country. This is 2013. So I met a whole bunch of amazing founders, and like I said, you're raising money here, and they said, well, there's no money to be raised in Australia. And I met all these really rich people, and I said, you're backing the innovators and the entrepreneurs, and they said, no, there's no good tech in Australia. And I said, this is just an unacceptable situation. We talk about burning platforms. Australia sits on a burning platform. If we think we can continue to get rich from digging shit out of the ground or building stuff on top of it, then we as a nation are in serious trouble. And so we found a problem that moved us, and so we got off our asses and did something about it, which is went to a few friends and said, we might blow up all your money, but we think this is important, so give us a little bit of money. And thankfully they did that, and even more thankfully we've backed now 13 businesses across a whole range from hardware through to marketplaces, some deep tech, mobile, payments and fintech. So we're really broad-based. And we said, that's what we need as a country. We need to back our founders, we need to make them successful, we need to take people on that journey, and then we might have a chance of continuing this lifestyle that we love. So I said I'd speak for 2 minutes. I think I've gone for my full 10 anyway, but that's enough for me.
You're doing okay.
Is that all right?
Yep,
all right.
Cool.
So I'll hand over. So we do seed stage, early stage, post-seed stage, early stage tech investing.
Don't worry.
Thanks, Paul.
And we'll keep the round of applause till after, so don't worry. Nobody has to feel awkward.
My name's Natasha Mandy. I'm the MD and founder of EM Advisory, and we play in a space that's very similar but slightly different to Paul and the Rampersand team. So in much the same vein, my background is in investment banking and corporate advisory. My whole thing was helping companies do what they wanted to do. But I had a passion for technology and a deep personal passion that goes back to really before the first tech boom, when it was slightly crazy to have that passion. And then I have a passion for doing the right deals in the right way. So there's a hell of a lot of transactions in my business that get done. Most of them should never have happened, never seen the light of day. The only people who make money out of these deals are the advisors. It sucks, it's unacceptable. And it's particularly poor for the founders. So again, driven by very much a similar problem where there were all these amazing founders in Australia who needed advice and needed help. And particularly in the technology company, we really define that as needing three things. One is they needed clearly defined and articulate, executable and describable growth strategy. So you needed to know what you wanted to do. Secondly, if you needed capital, you needed to be able to raise it from sensible sources, not sources that were going to kill your business, not sources that were going to make life harder, but sources of capital that actually help, sources of capital that you can leverage to do more than you could do on your own. And lastly, because ultimately, as much as we all do this for the love, it's nice to make a living doing this. Exits are a big part of where you go with a startup. So helping startups, and particularly Australian startups, do really clever, well-structured, valuable exits internationally. Stopping this whole, oh, you sell a business, and back in the noughties, you sell a business by advertising it in the Fin Review or the Australian, but actually going out and finding the buyer who was going to pay you the money that you needed and that you'd earned for the business that you'd built. So that's really what drove us. Now, heaps of people do that. That's not that differentiated. Where we're different is really, really simple. One, we're incredibly selective. And much like the keynote that some of you may have attended at 1:30, we love cockroaches. We love cockroaches because they're sustainable and they actually meet a customer need and are paid to do it. So we like companies that are earning some revenue and have some customer validation. Secondly, our focus is really on clarity of purpose, which is a very strange thing for a transactional investment banker to say. But our purpose and what really drives us is helping our companies clearly articulate their purpose that allows them to better achieve success and lower their risk profile, because we think it helps you with your growth plans and your execution, but it also definitely helps you with raising capital or M&A or anything else that you might do. And lastly, we want to do the right deals with the right people. So we probably, again, much like Paul, we all see a lot of deal flow. We will only work with someone where we feel we can add value. But having said that, if we don't think we can add value, what we really want to do is help you find someone that can. So we spend a lot of time with people helping them find the right way forward, because our focus is very much on what we call late seed Series A, so call it 3 to 5 mil capital raisings and above, and exits, particularly to an international counterparty. But that's really our shtick. We have 7 people in the team. It's a busy time, which is always exciting, and thank you.
Till the end, guys, till the end. I know you can't help yourselves.
She was better than me.
Next
Let's
up,
have
Jordan
a clap
Green.
for Paul. Come on. Clap
Oh,
for
okay.
Paul. I need the clicker. Gone away again. So I'm just waiting for slides to appear. Okay, wonderful. So I'm Jordan Green. I'm the founder and president of Melbourne Angels. As angel investors, we sit at the very earliest stage of structured or formal investment into startup companies. So at the very front end of what Paul does and typically before Natasha gets involved. So I just want to tell you a little bit about Melbourne Angels and what angel investors actually are. So Melbourne Angels is one of the most active early stage investors in the country. And what does that mean? Well, it means that we do a lot of transactions a year, a lot of investments a year, and reasonable amount of money. And there's quite a lot of us who are doing it. We actively syndicate our deals with other quality early stage investors around the country and around the world. And that delivers significant benefits to the portfolio companies, to the founders, around capital access and market access, which is perhaps even more important. What you're going to hear through all of this is some of our portfolio companies. We're very proud of all of the companies we invest in and the people that we're backing. It's the founders who make success. This isn't a complete list, but it is a gathering group. Now, there are lots of people who want to invest in startups, but not every person in the crowd who wants to invest in startups is actually an angel investor. An angel investor is someone who wants to actually create a portfolio of early stage investments in which they make an active contribution, a proactive contribution of their intellectual capital as well as their financial capital. And when you're speaking to an angel investor, they're investing their own money. And this is really important. The chances are if you're speaking to somebody who's talking about a fund, that's really good, but they're not an angel investor. And it may seem silly, but there's a lot of talk going around, and it's important to understand the different roles that we all play. We all play together, but we are different. And that's what Paul said when he first started. So as investors, we're really interested in aligning our interests with founders. A key way of doing that is angel investors will always want a minority stake in the business. So if you're talking to somebody who says they want 60%, 70%, 80% of your business in return for their investment, they're not an angel investor. It may be a perfectly legitimate strategy. You have to decide whether it's right for your company or not. But you'll never hear that from somebody who's actually actively participating as an angel investor. And in my opinion, unless they're going to be an active member of your executive team, you'll never hear it from a rational early stage investor. So that said, we care a lot about how we work with the founders, and more importantly, how the founders work. So we care about teamwork, and we care about leadership, and we care about ethics, and we actually care about you. And it's the caring about you, it's the caring about the founders that really makes it more enjoyable for us, because I can tell you, and this will be the same for all of us, there's a lot of work. I mean, Natasha said she's very selective. That means she has to look at a lot to pick a few. So there's a lot of work up front. You have to enjoy what you're doing and you have to care about the people you're working with. Otherwise, whether you're getting paid for it or not getting paid for it, it's probably not something you'll keep doing. We don't get paid for it. We are the investors. It's our money. No one pays us to be an angel. We do not take a fee from you. We are putting our money into your company. So we do, however, not just want to make a profit. We do like investing in companies that are going to change the world in some meaningful way. So it's really nice to invest in a company that's really going to make the world a better place. And it's very hard to get a lot of motivated investors interested in a company that isn't going to make the world a better place. So there's a whole bunch of things, but a big thing that angels deliver, I said intellectual capital before, our experience, our expertise. That's a big part of what we bring to the table, and if we can't contribute that, we won't invest, because we don't think we can help you. There are other places you can go to get just money. But we don't stand on our laurels, right? So we're a large group of successful men and women, but we continue to develop our experience and our expertise. And this is just a simple way sorry, I'll come to that in a moment. So this is just about the founders. Like I said, we want founders who are actively seeking to change the world in some small way. And that sounds a little bit crazy to anyone who's never been involved in a startup. And you just tell your family and friends, I'm going to do this, I'm going to leave my job, I'm going to start from nothing, whatever. They probably think you're a little bit crazy. We want that craziness. We want people who are driven to actually see the world differently. Those are the people who at least have a reasonable chance of success. And, well, this is more about teamwork. We've said we like to work together, be stronger together. I think I'll move forward. There's all sorts of areas in which you can invest. In my experience, early stage investors who are investing in the current trends are well behind the times, right? Because early stage takes time to mature, so early stage investors who are successful are investing well ahead of any observable trends. That might sound really silly, but if you look at it, early stage investing itself is inherently counter-cyclical. And what I've seen in doing this over 2 centuries is that you need to be early. I can't help it. I love it. and this is what I mean about experience and expertise. This is just an attempt to try and show some of the experience, expertise, professionalism that exists within the membership of Melbourne Angels. So what do we invest in? We invest mostly in early stage deals. Most of the things we invest in are actually pre-revenue, but they are not pure concept. So they're ready to kick on the revenue stream, but they may not have generated it yet. We're looking for something that's probably got defensible competitive advantage, an unfair competitive advantage. It doesn't have to be patents, but some sort of intellectual property, some know-how, some expertise, something that's going to give you that unfair advantage. That would make it really important. We are looking to see a high return in a modest time frame. We do also look at some later stage deals. I won't worry about that just now. So fundamentally, capital efficient is really important. We want to see that you're going to make really good use of our money. We're not super interested in companies that are then going to go off and try and raise $20 or $30 million of venture capital money, because that's a different investment model. It may happen, but it's not usually the plan. We are looking for a way to get our money back. As Paul said, you've got to make money for the investors. We're the investors. We want to see a way to do that. Most common way to do that is to sell the company. Remember, our interests are aligned with the founders. If we do really, really well, the founders are doing super well. And that's what we want to see happen. And I think, other than saying we have a process, but fundamentally, feel free to talk to me. Go to the website, submit opportunities through the website. We meet continuously throughout the year, and we'd be very interested in talking to everybody. Thanks. Would you, Kieran?
This is for Paul, for Melbourne Angels. Oh, wrong person actually. For Melbourne Angels. Sorry, what was your name?
Jordan.
Jordan, okay. Yeah, my name's Nicole. I'm just wondering, you were saying that the investors at the Angels like to get involved in terms of offering their support and mentorship and adding value in that way, but you also said at the same time it's a syndicate. So how does that work?
Good question. We have a whole lot of well-rehearsed and well-thought-through and well-practiced methods. So it starts with the fact that we'll almost always seek to take a seat on the board. That's one way to put someone who can add real value to the company. So let me make it very clear. We don't put someone on the board to protect our investment. That's not the right way to think. We put someone on the board to make a positive, active contribution to the success of the company. The person on the board, by the way, is acting for the company, not for us. Once you're a director, you act for the company. So governance is something we're very strong on. We also nominate from our syndicate, we'll nominate a specific person as our shareholder representative who will have that shareholder role. We seek to have, every 6 months, we seek to have a meeting between the leadership team of the company and the syndicate of investors, because we don't know exactly what challenges you're facing and you don't know exactly what we have to offer. And we found 6 months works about right. Less often, you're not really catching things early enough. More frequently, there's not enough time to react. So we haven't, and there are some other things, but we stay in touch, it's a continuous dialogue, and we have some structured mechanisms to ensure the best opportunity to contribute our resources into the benefit of the company.
Great. I think we have a question in the back here as well.
Yeah, hello guys. Obviously, I don't know how many pitches you guys have seen over your time, but it's more than 3, I would reckon, each. Everybody talks about it's all about the pitch, and especially at the early seed. What would you say, could you sum up as the ways to actually get you guys hooked in that 3 to 5 minutes you get initially?
Can I just start with the premise of that? It's not all about the pitch. And I don't think anyone, well, not people I know with an investment mandate would say that. It's all about the person. So it's not all about the pitch and it's not all about the business, it's all about the person. So we're all, let's categorise us all as early stage. And apologies to people who were in here before for the pitch panel, I'll repeat it. When companies come and pitch us, and they sometimes bring sort of 5 years of financial forecasts, and my comment to that is, we know that's wrong. We don't know what right looks like, but we know that's wrong. And why is because they're so early in their journey, the world is going to come, no plan survives the first shots of battle. Everyone has a plan until they get punched in the face, was a Mike Tyson expression, which I really like. And so what we're looking to back are people who have a vision, who have a power of conviction, who have a work ethic, who have an ability to overcome the inevitable challenge that they will face, and to grow, to attract good people, to do all the things that it takes. So it's actually that person that we're looking for, not that pitch. If that person can come through that pitch, that's fantastic. I know Natasha wants to say something. I just want to say something to Jordan's point about adding value. You're very unlikely to come across an investor out there who says, I'm an idiot, I'm not going to do anything, I'm just going to give you a check. Everyone kind of wants to add value at some point. And so one of the great things that's happened in the Australian ecosystem over the last few years is, if you go back sort of 3 or 4 years, there weren't very many structured investment vehicles. And certainly as Jordan's been doing it for 200 years, he's seen it all. But there's been a good growth. He looks all right, but for that age, you do. So what's happening that's really exciting in the Australian ecosystem now is that there are quite a number of structured funds, there are quite a number of active sort of angels, C groups and everything else. So actually finding the organisation, or even down to the partner or the individual who will help you, is actually really important. And help comes on a spectrum. Help can come from being on the board, like Jordan talked about. It can come from domain expertise, it can come from technical capability, it can come from marketing and communications or international growth. You're looking for someone's experience. It can come from, frankly, knowing when to shut up and get out of your way. I think it's really important, is understanding that it's your business. You're the founders, it's your business. It's your success we're trying to back. And normal people are not hugely successful. It's not an outcome that happens to normal people. Normal people kind of don't start businesses in the first place, and they're certainly not super. If you look at every super successful person in history, they're not normal. It ain't the norm. So we're kind of looking for people who are not the norm, and we're backing your expertise and your drive, and it's your business. We want you owning the majority of your business, owning your fork. So sometimes help is just shutting up and getting out of your way, but there are hundreds and thousands of decisions you're going to make along the way, and if you can't surround yourself with the kinds of people who have made decisions like that before, or who can give you a framework for making that decision, then you're going to find the journey very, very difficult. So investors will try and do that with you, and one of the challenges, and none of it's easy, is to try and understand what is the value that they'll bring. At Rampersand, we've got a bunch of people who have been operators of businesses who've gone global, and who have expanded and who've exited. So we have sort of growth, we have some people and culture, and we have some M&A within our partnership groups. That's what we think it takes, the kinds of support that successful founders and successful businesses attract along the way, whether that comes from within our partnership or whether we can help you find people around it. That's what we focus on.
So I think Paul's given you a lovely summary of the nub of the question, which is the pitch is just a set of slides, and the set of slides, very, very good salesmen don't necessarily make terribly good founders. Equally, you do need good sales capability, or you need to solve a problem that needs to be solved, and you need to find someone who'll pay you to solve that problem. Now, how you work out how to do that and how you then build a team around you to do that is fundamental. So when people come to see us, as Paul said, it is all about the people, but for us, we're looking for a couple of specific things. So one, got to be the right person. Not the right person, really short conversation. Second thing, are you solving a problem that's actually interesting enough to solve? Is it big enough to solve? Are people going to pay you to solve it? So even if you haven't worked out exactly what the solution is, or your solution's not quite right, you've got to be in a domain that's actually interesting enough to attract external capital when you're raising capital. Now, it may well be that you actually are solving a very narrow problem. That doesn't mean that problem doesn't need to be solved. It just might mean that raising capital isn't the right way to take that solution forward. And you need to be clever and find another way. So raising capital is not the only way to succeed. I'll just give you a statistic. 68% of companies that exited in 2016 raised no money. 2/3 of companies that were sold in 2016 had not raised $1 of capital. Raising capital caters for a very specific type of investor. These guys have laid out for you pretty clearly what they want and what they're looking for. And when they get involved, part of what you want your investor to do is to actually add value, because money exists. It can have different rules, it can have different focuses, but there is a lot of money in the ecosystem. Getting someone to part with their money, now that's a challenge. Pitch decks are part of that. People are more important than pitch decks. Having a customer value proposition, a clearly defined thing that you do that someone pays you for, also very important. And then having the resilience to survive the inevitable setbacks, crucial. So all of that comes down to team. Don't think that capital is your only way. It just isn't. There are heaps of other ways to solve that problem.
Yeah, okay, go for it.
Just very quickly, so ditto. I agree with everything that's said. But to answer the question quite explicitly, and just really, I guess, reiterating, the pitch is part of a relationship, and the purpose is to get a conversation. Right? Yeah, so it doesn't have to be everything, but you do have to say the who, how, what, why, and you have to show that you're compelling, that you know a lot about what it is you're talking about. So all the things that Natasha just said, it has to be a good problem, it has to be a good market, but you have to show us that you know that in that short time frame. Not give every detail, but show your command of the opportunity that you've identified and some reason to believe, as Paul said, that you're going to be the person who can actually do something special with it. That's what you're trying to achieve. After that, you get the conversation and you build the relationship the way that Paul and Natasha described.